And so that halving is very symbolic. People talk about Bitcoin, issuance coming out over the next 100 years, all the way till 2140. But the truth of the matter is, the last 100 years, you're only getting 1%.
Hey guys, welcome back to Everyday Finance. In this video, Michael Saylor discusses Bitcoin and crypto. Michael Saylor believes that this year holds great potential for Bitcoin. The year began on a positive note with the approval of the ETF, which was a significant development, significant achievement. He believes that the ETF's success is a significant achievement. The halving in April will also contribute to positive progress. These factors will drive momentum, and the competition among Wall Street firms will have a beneficial impact. The assets will become more normalized in the mainstream investment community, which will further fuel momentum according to his perspective. And lots of things Michael Saylor discusses, so please watch the video to end, and share this video and subscribe our channel Everyday Finance. Thanks.
I think the risk-reward proposition for Bitcoin in the year 2024 is better than any other time in the history of the asset, because you have institutional adoption, you have regulatory clarity, you see capital coming into the space, and yet still you can do the survey yourself. Ask 100 of your friends if they're fully invested in Bitcoin and if they understand it. And if 95 say no, I would say do your own research. But Bitcoin's 15 years old, so let's look at other great investments. 15 years after Manhattan was founded, was it a good investment? I think this is going to be a good year for Bitcoin. I think we started out the year with the ETF approval, and that was a big milestone. I think that the success of the ETFs is another milestone. I think that the halving in April will be a third positive milestone. I think those three things are going to drive momentum, and I think all the marketing wars between the Wall Street firms is going to be positive, and I think the assets being normalized throughout the mainstream investment community, and so I think it'll just keep generating momentum from here. I think it's also worthwhile, I think, to make one point. I think that we're living through the Bitcoin gold rush era. And I think the Bitcoin gold rush era started January 2024. And I think it runs until around November 2034. So it's about 10 years. And I'll tell you why. Because 93.5% or so of the Bitcoin was mined at the beginning of this period. But in November of 2034, 99% of all the Bitcoin that will ever be issued will have been issued. And so that halving is very symbolic. People talk about Bitcoin, issuance coming out over the next 100 years, all the way till 2140. But the truth of the matter is, the last 100 years, you're only getting 1%. So think, and actually of that 1%, 90 basis points of it is coming in the 12 years that follow 2034, and then it's 10 basis points, 1/10%. But practically speaking, all of the block rewards are de minimis starting in 2034. It's 1% over 100 years may as well be nothing, because the daily volatility and the daily trading volume is going to render that to be somewhere between third order, fourth order, fifth order of magnitude. So that being the case, really, this 10 years is your best chance to get Bitcoin, right? This is the gold rush, because this is the period where there's still a lot of FUD. There's still a lot of uncertainty. People still aren't sure. They don't understand digital energy. They don't understand digital capital. They don't understand digital property. There's a lot of debate in the community. Is Bitcoin a currency, or is it a property? Or, there's massive debate. And a lot of people say, well, it's a currency, and since it's not legal tender, or because it doesn't move fast enough, or I can't buy coffee with it, it's not a good currency. So there's a lot of confusion in the crypto community. There's a lot of mainstream regulators. They think it's currency. So you see bankers say, oh, it's a currency, but it's not a good currency because I can't buy coffee with it. I can't buy things online with it. And it's too volatile. And they think that's a criticism. And so they criticize it. And then people that think that they know what they're talking about, they hear some famous person say, well, Bitcoin is not a good currency and, or the government will ban it, or it's not as good as the dollar or something. And so they get afraid. And they say, well, then I trust that guy, so I'm not going to buy it. So a lot of people are criticizing it for the wrong reason. A lot of people misunderstand it, and that creates lots of chaos, misinformation, stupid, misleading stories in mainstream media. It creates like bad takes on Twitter. It creates all sorts of confusion amongst Wall Street analysts. And so all of that fear, uncertainty, and doubt, and just basic confusion, and then misunderstanding, that causes a slow growth in demand, right? Like demand is growing, but imagine how much faster it would be growing if everybody had spent 100 hours, right?
Bitcoin is generating a plethora of amusing memes this week, extending far beyond its notable 420 reference. Thank you contributing to the success of the spot, Bitcoin Exchange Traded Funds. ETF market observers are rejoicing over a remarkable performance that has been nearly flawless. The price of BTC may be experiencing a period of stability, with little movement in either direction. However, the timing of this lack of action is giving me a sense that it was all part of a larger plan, as mentioned in a recent post on X, formerly known as Twitter. Eric Bellines, a diligent ETF analyst at Bloomberg, stumbled upon an intriguing and unexpected occurrence. The significant event occurred on April 20th, which aligned perfectly with its purpose. Additionally, the largest United States spot Bitcoin ETFs experienced 69 consecutive days of improvement, creating an almost flawless outcome. Balkan expertly summarizes this remarkable occurrence. The inflows of the Bitcoin ETF have experienced a slowdown in March after reaching their peak. Despite BlackRock's shares, the Bitcoin Trust IBIT, the largest ETF by assets under management, has not experienced any outflows since its inception. The most recent data reveals that there has been a slight shift in momentum towards the end of last week on April 19th. During this time, the IBIT ETF received just under $30 million in investments, while Fidelity Investments' second largest ETF saw outflows of nearly $55 million. The outflows from the Grayscale Bitcoin Trust, GBTC, which has been a topic of ongoing debate, were relatively modest at $45.8 million. This recent trend is worth noting. 13 filings have raised concerns about the failure of Bitcoin ETFs to gain widespread acceptance among the majority of investors who are currently focused on analyzing first-quarter allocation data. Jim Bianco, the creator of macro research firm BNO, expressed his disappointment with the shrinking unrealized gains. In a recent thread discussing ETF investor gains compared to the current BTC price action, he highlighted the fast decline. Let's back to the Michael Saylor interview.
And the mainstream investors, they have all the money, right? There's $900 trillion of wealth out there. There's only $1 trillion in Bitcoin. So 99.9% of the money, of the wealth, is not invested, right, in the asset class. So a lot of people that don't understand what this is have a lot of money, and yet we've got a 10-year period when there's going to be an explosive increase in education, right? As Bitcoin's going to go up, and as the price goes up, more people are going to get asked, and they're going to reject. They're like, stop asking me. I hate talking about this. Like, we don't like it because it's like gold. It doesn't generate cash flows, or they don't understand. If you don't understand perfect money, right? What's wrong with gold? Gold has emissions. Gold is inflationary. That's why it doesn't work. If you don't understand that, then you don't understand why digital gold is better than gold. So you don't understand Bitcoin, you don't understand money, and then you haven't really thought very deeply about property theory or capital theory. So you definitely don't understand digital capital, which means you don't understand digital energy, which means that when someone asks you, you're going to buy it, your answer is, of course, I'm not going to buy it. I don't get it. But when I say to people, right, like, if everybody read all these books, if they listened to all your podcasts, if they listened to all my podcasts, if they thought about it for a few hundred hours, tomorrow they would wake up, they would all buy Bitcoin, and Bitcoin would be $5 million a coin. And then we'd be doing this podcast, and you would say, Mike, all the comments from all my followers are, is it too late? And I would say, well, it's too late for you to get insanely rich. You're not going to get 100x, right? If you buy Bitcoin at 50,000 when it's 5 million, you're going to be bragging to your kids that you got 100x your return, right? So it's going to be too late for that, but it's not too late to buy it, because it's still better to buy the thermodynamically sound digital asset, which doesn't have all of the liabilities of real estate, stocks, or bonds. It's still going to go up in value faster than the S&P index. It's still going to be a better after-tax return than owning sovereign debt. It's still going to be better than owning physical property subject to acts of God, force majeure, and all the other physical limitations. So it's still going to be the best investment. It's just not going to be the investment that got you the 100x return that you were going to brag about. And so there's no reason to worry, right, or fret. You don't want people to figure this out.
With the reduction of the block reward from 6.25 BTC to 3.12 BTC, miners are now encountering considerable obstacles. Omar Loves, the founder of Cryptoid Club, revealed that some miners will be forced to close their operations due to the economic infeasibility of continuing. In fact, some may even find themselves operating at a loss. This situation can be seen as an example of game theory, as explained by Lopez. At first, when 1,000 miners are successfully mining 6.25 BTC, the equation for profitability undergoes a significant shift. This shift occurs when the reward decreases to 3.12 BTC, which is then divided among the same number of miners. As a result, miners who cannot afford to sustain losses are compelled to cease their operations. Over time, this attrition could potentially reduce the number of miners to around 600. For these remaining miners, the reduced competition for the 3.12 BTC has the potential to restore profitability. Miners in the mining landscape closely monitor the price of Bitcoin, as it directly impacts their profitability. When the price of Bitcoin is low and mining becomes unprofitable, many miners choose to power down their machines. This trend continues until the remaining miners find it worthwhile to compete for the 3.12 BTC reward. This dynamic can be seen as an application of game theory. Glory Lowe's provided an explanation. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.